And for reference, see this line here before we go into any analysis. This is this pink line. This is an axis line. Resistance, resistance, resistance. We break through, we hold, we hold. This is a valid break. We come back, resistance, valid break, support, valid break, resistance, 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 valid break. Look at this rounding over action. We come down here, failed spring, we test, we hold, we hold. We churn here before boom, we break through, valid break. We come up, valid break. And what do valid breaks do? They validate the axis line itself, even though it doesn't touch and bounce off as you would think it would do. It's because there's a commitment to break through this area, which again validates the level. So support and resistance levels don't have to work by support holding and resistance holding. I know that sounds counterintuitive, but if there's a commitment to break through, we classify that as an additional touch. Okay, and here we break through and then it holds, then it holds. Okay, so this is the axis line, extremely important. Look how many days, 1, 2, 3, 4, 5, 6 days. And it actually goes back to 10 days. And of course, this is very zoomed out, extremely zoomed out here. So going back here, this is that axis line. So what do you see here? Just tell me what you see. Tell me what you're thinking. Because this is all the information you require right now to be able to decipher your license to be either a buyer or seller. But importantly, tell me why. So I'll tell you what I see here. Well, we have a trading range. Okay, and what does a trading range do? It builds causality. And then we come down here. We approach the axis line. We try to hold. It doesn't. It fails. But what do you notice about the fail? It's not a valid break. We become oversold in this channel. Look at the market. It tries to hold here. And then boom, we do break down. And we become oversold within this micro channel here, the dotted channel. And then what happens? Well, we get shortening of the thrust, and then we hold, and then we expand to the upside. Now, what do I see here? This is the first thing that caught my eye. This is the selling down. This is the drive up. What can you tell me about these two drives? What's of better quality? Yeah, this drive up is absolutely superb price action. Now, just try to think from a macro perspective. This is a 10-day axis line. We try to break. We do become oversold here, yet no downside follow through. And then we get the best buying we can see on the chart. So essentially, think about this. We could just picture on our mind's eye, is this being a flush down or a spring? There's no selling force under this 10-day axis line. We become oversold. There's no downside continuation from this bar. Okay, this looks weak, big question marks. And then we rally above it 4 bars later. So we could kind of label this kind of shakeout. All of this action here is kind of shaking out weak hands. And then from here, we're met with the best buying. Okay, and just look at the way the volume is expanding and the spreads closing firm. So in a sense, if we are rejecting a 10-day multi-day axis line with weak selling followed by very, very good buying, we are looking to be a buyer. I'll quickly go through this with you. So we get this bar. We popping up. Okay, we see some supply. Let me just bring this in here. We see some supply. That's kind of good because I'm thinking, we want to test down here, don't we? Kind of like a backup to the Edge Creek, if you think in those terms. It isn't, but this is a continuation play. kind of. What's this? What's this bar here? It's a no supply bar. Look at the volume. Very, very narrow spread down bar. However, I'd like to see a little bit more confirmation. Okay, so I'd let the market pull me in if we break the highs. Okay, next bar. It doesn't pull me in. It doesn't pull me in. But what do you notice about this bar? What is this bar? We get no supply followed by a dip down into this area to reverse and close firm with a huge surge in volume. It's active buying after no supply. So logically, I'm thinking, well, I want to see a test down here, but we've seen no supply. Now we've seen active buying. Do you think this market here is likely to come back to test? No. Ergo, buy. Or originally, I was going to let the market pull me in above this no supply test, which didn't happen. Okay. And now don't forget, we have causality behind us. So we want to try and ride this trade the best we can because we have cause, and the effect obviously being the subsequent trend. So from here, okay, this was worrying. Okay, but you know, don't forget we're playing the chart. Good. Boom. Now, I love this. Now, what am I thinking here? Drive up. This is the reaction. What do you notice about the reaction? Well, the inability to even test down here. And it's only, if you think this is the drive from the lows to the highs, okay, this here is only what, 20% of the move? This is, yes, it's a shallow reaction. This is extremely bullish. Then we're met with this bar here, which, yes, granted, it doesn't break the highs here, but it does break through this local resistance. And through here, good wide spread. Closing firm. Fantastic. What do you think I do here on this bar? A partial cover. Why? Well, because it is resistance and we've encountered some supply. 44. So that's still 22 ticks. That's $220 per contract. And now I'm thinking, oh, well, okay, I'm still only partial covered. Okay. But the market we're probably going to come and test down here now. This is what I'm thinking. This is, you know, this is the thought process. Okay, we'll hold up. We come down, little increase in volume. Spread increases. Okay, we're looking for some kind of spring bar. Okay, we hold, no downside follow through. Close off the highs, still a little supply here, but volume has deteriorated. And what do you see here? What do you see here? Yeah, no supply. Now, ordinarily, and this was another entry. You could pick this one or this one, but it was this one. And this was on the close. I wasn't letting the market pull me in. Why would I do this trade? First of all, good drive up, inability to react. Good drive up. And where are we? We're at this resistance of this trading range, and there's an inability to react. And we can see that supply is reducing. Now, ordinarily, we wouldn't buy into resistance, but what are we trading here? We're trading the chart, and we've just flushed under and saw no selling at a 10-day, multi-day support axis line. And then we've seen good buying. So ergo, and we've got causality. So this, in my mind's eye, I'm thinking, well, excuse me, I don't want to get tickitis. This kind of, what do you think holds more value? This 10-day axis line or this level of resistance, which has been in operation for a few hours? Exactly. Yeah, we should knife through this. Okay. You know, these are the thoughts going forward. Yes, it is a resistance, but what holds more value, this or this? Obviously the axis line, and we've just tested under there. There's no supply, and we're met with the best buying, inability to react, good breakthrough, inability to react. Again, no selling pressure. So this is kind of the way, this is the way that I'm thinking here. Anyhow, So then, and you can also buy this bar. We can see volume expand. Sorry, we can see the spread expand. Beautiful. Good firm close. Boom. Breakout. Push it up. At this point, what do we draw? A channel. As we break these highs, we draw a channel, and it gives us a potential target. Cover here. Why would I cover here? Partial cover. What is this bar? Yeah, we're overbought and it's climactic in nature. Look at the volume. We close off the highs. Yeah, beautiful. So I'm expecting some kind of reaction, as we would do, but this is a good, strong move. Beautiful move. Doesn't happen. So momentum pulls us higher, which is healthy for our trade. And then we get this bar on this spread. I don't know what this means. It's a down bar, smaller than the previous bar with higher volume. Okay. Now, I thought about this bar, and you have, again, we just need to understand what's going on here. It dips into this climactic bar and it stalls, doesn't it, with all that volume. If this was supply related, we would be printing a wider spread to the downside. And now ask yourselves, when you come across these bars, just go back to the basics. Who's in control? The buyers. Who needs to prove themselves? The sellers. Now, with all that force of selling, all that force here in terms of volume, do we print a wide spread to the downside? No, we don't, do we? So thinking in those terms, although it is labeled with a question mark, okay, I'm not particularly worried about the trade. I don't think we're coming back down here. I think we're going to test into this big climactic bar, which the market has every right to do, as we know. But the fact that we carry on and momentum pull, 22 up to, it's another 40 ticks. This market is strong. It shouldn't do that. Okay. Ordinarily, we know that from climactic bars within a, kind of a nice little established trend for the time frame, this action doesn't really occur. It kind of halts, and we can draw a resistance from the highs and the close. This doesn't occur. Again, I interpret that as bullish. Okay, we do come down. Now, this is making me feel uncomfortable now, granted. But I think you can see I do draw a level of support from there. And this raises an important question here.